Geopolitical tensions between the US and Iran sent oil markets surging toward their biggest weekly gain since April, rattling gold and reshaping currency flows across the board. And that's just where the story starts. This morning's brief covers Forex, metals, and indices, with a packed set of US data events on the calendar that could move markets before the weekend. From the euro and the pound to gold and Asian equities, the full symbol-by-symbol read is ahead. Stay with us. Escalating US-Iran hostilities, including strikes across the Gulf and threats to close the Strait of Hormuz, pushed oil sharply higher through the week and stoked global inflation fears, lifting yields and prompting the Dallas Fed's Logan to call for modestly higher interest rates. Gold slid below the $4,000 level and is on course for a weekly loss as the combination of dollar strength and rate hike rhetoric weighed on the metal. Asian technology shares came under pressure as the artificial intelligence rally showed signs of unwinding, while the Indian rupee approached record lows despite Reserve Bank of India intervention. On the currency front, the dollar found broad support following the Fed commentary, while bank research flagged further moves in euro cross rates against commodity currencies. The key event to watch on the calendar today is U.S. preliminary University of Michigan consumer sentiment and inflation expectations, alongside remarks from President Trump. Euro-yen has been pressing firmly to the upside, with the structure showing consistent higher lows that keep the trend pointed toward higher levels. The path of least resistance remains to the upside, while that bullish architecture stays intact. And any pullbacks into established support have continued to attract buyers, reinforcing the underlying momentum. China's benchmark 50 index has been carving out a sequence of lower highs and lower lows, a pattern that keeps the trend leaning decisively lower. Price action suggests the market is more likely to extend toward lower levels, while sellers maintain control at each recovery attempt, and there is little in the current structure to suggest that pressure is easing. Gold is trading in a bearish posture following its drop below the $4,000 area, with the weekly close shaping up to confirm the loss of that key psychological zone. The trend is tilted lower, and the metal looks more likely to probe lower levels, while rate concerns and a firmer dollar continue to frame the backdrop. Pound dollar is holding a bullish structure even as the dollar found some footing this week, with sterling's resilience keeping the overall trend pointed toward higher levels. Dips have been relatively shallow, and the broader pattern suggests the market is more inclined to work higher while the current structure remains in place. Dollar-yen has been trending higher, supported by the pickup in U.S. rate expectations after the Dallas Fed's comments, and the trend remains pointed toward higher levels on the daily structure. The path of least resistance stays to the upside, while rate differentials continue to favor the dollar against the yen. Kiwi yen is tracking a similar bullish theme to other yen crosses, with the trend leaning higher and price action continuing to respect the sequence of ascending lows. The market looks more likely to extend gains toward higher levels, while yen weakness persists as the dominant cross-market driver. Euro-dollar carries a mild bullish label on the trend, but the probable path points lower in the near term, suggesting the pair may be in a corrective phase within a broader structure. Price is more likely to ease toward lower levels in the short run while that corrective pressure persists, even as the longer-term picture has not fully broken down. EURUSD is trending lower on a mild bearish setup, with the pair consistently failing at resistance and drifting toward lower levels on each leg down. Bank research flagging further euro weakness against commodity currencies adds context to the bearish lean, and the structure suggests more downside is the more probable outcome while the pattern holds. Aussie dollar is trading in a range-bound environment, with neither bulls nor bears establishing a clear directional edge, though the probable path leans higher from current levels. The pair is more likely to grind toward the upper end of the established range, while the range structure holds, and commodity currency sentiment provides a mild tailwind. That wraps ForexBullion's morning brief for Friday the 17th of July. If this breakdown adds value to your pre-market preparation, hit subscribe so you never miss a session. This is general market information for educational purposes only, not financial advice.